June 7, 2014, current time is 16:22 GMT. Jay Meisler here with the Forex trading outlook for the week ahead. I think this is a good time to do it with the market settling in after two key events, and really in the Eurodollar, no net change after some choppy trading. The question you have to ask yourself is the Eurodollar still bid in an offered market? It has been for the past several weeks, where it's been trading in this tight range. That's a question will be answered probably in the days and weeks ahead as the market continues to debate whether this was just a correction down or the fact that start of a lower range. My feeling is the top is in right here for the year, just below 140, and the question is, where is the bottom? The key levels here on the downside remain at 134.75. You got a weekly trend line here, comes in at 134.30, and on the upside we've had 4 weeks of lower highs and lower lows, so we'll have to watch the range for this week, which was 135.03 to 136.74, to see if that pattern is broken. Not a big data week for the euro or for the US, so we just have to digest what goes on. If you look at the daily chart here, you look at the daily chart, we did make a slightly higher high here today. Key levels have really not changed. I will call them 1.30, and pardon the writing, I'm typing with a mouse, 36.88, and then you got 1.3735 to 75 on top, and on the downside the obvious level is 135.03, which for the moment seems safe. We have a pattern of 7 days in a row which was broken around 136, did not trade. That's generally bullish. When these patterns are longer, they go on, you more get a direction move. We'll see if that transforms. We'd have to get above the 20-day moving average, which is also around the 200-day moving average, is not shown on this chart, which came in around 136.55 to 58 on Friday, and so we need to close at least above 136.55 to encourage a move higher. Now, if we look at the 4-hour chart, interesting, except for this, now it looks like a phantom move down. We've been in this range here, which is 135.85 to 136.88 for quite some time, as you can see, and we're back in it right now, and look, I'm going to close below it. So if you want to take a bottom line of what's going on, and for next week, it's probably going to start off on a cautious note. As I said, the question is Eurodollar appearing bid above 136 in an offered market, or is it this is just more range trading between 135 and 137 before it moves down to a lower range? As I said, 134.75 key on the downside. 137.691 is 38.2% of the range, from 139.96 to 135.03, and 137.50 is 50%, and 137.50, if it ever gets up there, should be a difficult level. So next week, I think we're going to probably start off in one of these range markets, inconclusive. Stop still probably closer to the up than the downside, but I think you have interest on both sides. So expect a cautious start to the week. As I said, the question is Eurodollar bid in an offered market. And one thing I've been pointing out, I'm going to point it again. Look at this article right here. Sorry for the drawing. It's adapt or die. Just click on it. I think I'm getting great reviews on it, so I'm posting it again. Anybody who's trading in this market and what we call a low volatility market should read this article. So click on it. It's embedded in the video right here. And feel free to comment on it in this thread or contact me directly. Good luck with trading in the week ahead.